Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial report of Nuveen Churchill Private Capital Income Fund, but don't worry, it's not going to be a snooze fest. Let's just say this fund is trying to balance making money now with promises of even bigger returns later, which is always a fun tightrope walk. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us for chats and exclusive content. So what's the story? This is Nuveen Churchill Private Capital Income Fund's quarterly report, basically a checkup on how their money-making machine is doing. They're a business development company, or BDC, which means they lend money to and invest in smaller companies. They're aiming for reliable income, but also keeping an eye on future growth. First things first, they've got a fancy commission file number letting us know they're legit and following the rules. It's always good to see they're on the right side of the law. They also confirmed they're not a shell company. This is just a formality where they are reassuring investors that they aren't some fake entity. Okay, let's talk shares. These shares represent ownership in the fund, and there are actually three types: Class I, Class D, and Class S. As of May 9, 2025, there were over 38 million Class I shares, almost 900,000 Class D shares, and just over 1 million Class S shares, almost 900,000 Class D shares, and just over 1 million Class S shares. The amount of each type of share class determines who has the most influence on the company's decision making. Here's where it gets interesting. Looking at the balance sheet, we see they have nearly 69 million in cash and cash equivalents. That sounds like a lot, and it is, but it also means they have money ready to deploy into new investments. What does that signify? Possible growth. Of course, the bulk of their assets is in investments totaling over $1.8 billion. The fund has been doing a good job investing and making money, and this huge portfolio is the proof. Of course, they have liabilities too, over $1 billion, meaning they're using borrowed money to amplify those returns. It can be a great strategy, but it also elevates the risk. Their total net assets is around 910 million. Let's talk performance. When we look at income per share, we can see net investment income, or what money they made, per share is pretty close across all share classes, averaging about 70 cents. That's decent. And also for net increase in net assets resulting from operations per share, we get around 40 cents across all classes. Now for the real meat, a detailed look at where their money is parked. By far most of their investment is in loans to non-controlled and non-affiliated companies, basically companies where they don't have major sway. Breaking that down a little further, they are pulling in just over $40 million in interest income. It means they are pulling a reliable income stream from its lenders. But to make money, you have to spend money. Their single biggest expense is, unsurprisingly, paying interest and dealing with debt financing. This quarter, it ran them just over 14 million. As they make more loans, these expenses will grow. Let's look into where they put their money. What sectors are we talking about? Well, aerospace and defense, automotive, then banking, finance, and real estate. I'll mention a name, AIM Acquisition, LLC, a first lien debt for $5,468. It gives us an idea of where they make their money. Some more investments worth mentioning are in names like Turbine Engine Specialists or Precision Aviation Group. You can see the full list in the exhibit files if you really want to deep dive and get the full picture. Here's a big red flag. They actually used $108 million in operating activities. That basically means their business operations consumed more cash than they generated, which can point to problems down the road if it becomes a trend. Fortunately, proceeds from the issuance of stocks were just above $86 million. These proceeds from issuing stocks and taking out more secured borrowings is how they covered the gap from the operating cash flow. The money coming in from investors just barely managed to keep them afloat, ending at a meager $1.9 million increase. Cash and cash equivalents beginning of period was around 67 million, to have only increased by 2 million, while depending on the issuance and repaying secured debts doesn't seem too secure. One last thing worth noticing, there was around 9 million in reinvestment of shareholder distributions. This is an investment with a fair value of, same goes for Cool Buyer Inc. The delayed draw portion of these loans indicate that although they can provide this capital, they currently don't have a way to make money in these investments. There's a ton of tables, but the best quick summary we can give you is the table on consolidated statements of changes in net assets. The numbers we see there is for net assets. There was an increase of a little over 83 million, which is from net investment income and capital share transactions, aka stock issues. Now that we got through the numbers, let's talk about warnings and risk. Reading through the footnotes, we discover that a bunch of their investments don't have reliable price quotes, and they're having to rely on their own judgment and outside valuation specialist, as they stated previously. Anytime you're relying on estimates, there's room for error, and that can impact the real value of this company, which makes their numbers more risky. They mentioned something called the Investment Company Act of 1940 throughout the report. All it does is make them have to follow certain rules, mostly around what they can invest in. But what is meant to term risky these days? So that's the story with Nuveen Churchill Private Capital Income Fund. On one hand, good increase to capital and deployed funds. But on the other, there is a reliance on debt, potential for volatile valuations and high expenses. Is this a well-oiled money machine or a tightly wound spring? The answer to that question all depends on whether their investment choices will pay off, and if the debt will be used to continue expansion or if it will become a trap. Alright, that's our breakdown of Nuveen Churchill's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.